Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Tuesday, 5th August. Coming up on the show, earnings continue to take centre stage after Palantir reported its first ever billion-dollar quarter overnight. Oil giant BP has just reported this morning. It too reported stellar numbers, but the company has vowed to do more for investors. And we look ahead at what to expect when Disney reports later today. So grab your coffee and let's own the morning. Okay, the first thing you need to know before that opening bell rings is that after a tumultuous week on Wall Street, US futures, well, they're heading higher. As you can see, it's green across the board. On Monday, stocks rebounded sharply after tanking on Friday in the aftermath of a number of market-shaking events, including a weak jobs report, fresh tariffs, new signs of rising prices, and the firing of the Commissioner of the Bureau of Labour Statistics. That tariff threat hasn't gone away. Yesterday, President Trump threatened to hike tariffs on India. He's angry about the Southeast Asian country's purchases of Russian oil. Last month, Washington announced that India would be hit with a 25% levy on its exports to the US. For its part, New Delhi has hit back at the president's threat. It said it would take all necessary steps to protect its economic interests. The next thing to know about before that opening bell rings is that oil major BP has reported better than expected second quarter results. BP reported adjusted profits of $2.4 billion for the period, a third higher than analysts expected. And it's raised its quarterly dividend by 4%. The company maintained a $750 million quarterly share buyback too. However, BP said that it will review its portfolio of assets and consider more cost cuts as part of a drive to do better for shareholders. Under pressure to improve profitability, not least from activist investor US hedge fund Elliott Management, CEO Murray Auchincloss earlier this year announced plans to sell $20 billion of assets through to 2027, as well as to cut spending, debt and costs. Today, he signalled further action, but without giving details. The quarterly performance benefited from a 33% increase in profits at BP's customers and products business, driven by strong oil trading results, higher volumes, and a 20% rise in earnings at its Castrol lubricants unit, which the company plans to sell. BP shares listed in London rose in response. Its shares listed in New York are also set to rise when the opening bell rings too. Now remember that BP shares have underperformed its rivals since its 2020 shift towards renewables under former CEO Bernard Looney. That's a policy that's firmly in reverse. And the final thing to know about before the opening bell rings is again focused on earnings. Palantir reported a 48% increase in revenue for the second quarter to more than $1 billion, citing the astonishing impact of artificial intelligence technology on its business. And as you can see, that's having quite the impact on its share price. In the pre-market, it's up over 5%, as you can see there. It's on track to hit an all-time high when the New York markets open. Well, let's dig deeper into Palantir's results. Here's what Wedbush's Dan Ives had to say about the record quarter.
It's a blowout across the board. I mean, look, that's why they're the Messi of AI, right? I mean, it just speaks to this is transformational, the type of growth they're seeing. And you combine that with what we saw last week from the hyperscalers, that just shows this AI revolution. It's just starting in terms of the next stage of growth. Huge, huge step forward for Palantir.
Karp telling me, Dan, Alex Karp, CEO, told me there is no one in software even remotely close to the numbers at our scale, he was saying. Listen, you cover a lot of tech names, you cover a lot of software names. You agree with that?
There's nowhere close. I mean, if you look what they're doing, I mean, look, I've covered tech 25 years. This is unprecedented territory. It speaks to our view. It's $1 trillion market cap in the next 2 to 3 years. I mean, they are, look, godfather of AI, Jensen, NVIDIA, Microsoft. You look at Alphabet. You look at, obviously everyone that we see in terms of big tech. Palantir is right there.
Let me ask you, Dan, heading into this print, this stock was up 560% over the past 12 months, okay? Just a rocket ship. And there are some analysts on the street, Dan, smart guys like yourself, who've been doing this a long time like yourself, who will say, listen, I like the company, I like the tech, the fundamentals look solid, but they don't recommend the stock to clients, Dan. You've seen this because it's the valuation. They'll call it, in their words, an irrational valuation. What is your response to that?
They hate it at 15, despise it at 50, screaming from the mountaintops at 100, and I think at 200 they'll be doing the same. Look, Josh, we've talked about it. If you focus just on valuation over the next year, you've missed every transformational tech stock the last 20 years. And Palantir, I put in the same category.
Let me ask you, Dan, if it's not valuation then, and you're bulled up on Palantir, you've been right for a long time on this name, but the clients must ask you, Dan, okay, it's not valuation, what are the downside risks that I need to consider? Would it be competition, Dan? Is it product fit? What would the risk be?
Look, you could say valuation, macro, those are obviously, other issues that we could see come through. But the reality is that it's still early days in terms of where they're going. My view, they're basically creating a whole nother business in terms of the commercial business. Then you look on government, they're gaining more and more share on government. It's kind of a 1-2 punch. I think Karp's just playing a different game, right? I think he understands on par with Jensen and Nadella in terms of where this is all heading.
Okay, for moving markets, we're going to focus on earnings that have just been released. We start with pharma giant Pfizer. Now, it's quite a beat here. Now, the expected adjusted earnings per share was 58 cents. Actually, it came in at 78 cents. Revenue over the quarter, get this, came in at $14.65 billion versus an expected $13.5 billion. Pfizer's shares there, as you can see, a lot higher there, over 2% higher. They've said they're going to make cost savings of $7.2 billion by 2027, and they've also upgraded their adjusted earnings per share for the whole year. Now, clearly, investors in all pharma stocks were likely to be worried about the threat of pharmaceutical tariffs, as well as a crackdown on the price of drugs. It's interesting to note that coming into these earnings, analysts that cover the stock had grown increasingly bearish. There were actually 6 downward revisions over the last month or so. Now, watch out later on Yahoo Finance when the CEO of the firm, Albert Bourla, will be interviewed by my colleagues Julie Hyman and Anjali Kemlani. Okay, next up, we have Q2 results from Caterpillar. A bit more of a mixed bag here. The earnings per share came in at $4.72. We were expecting $4.88, but revenue came in higher than expected at $16.57 billion versus an expected $16.33 billion. And that's seen its pre-market share price fall quite substantially there, over 3%, as you can see there. In fact, Caterpillar shares, though, are up around 20% year to date, though they have slipped over the past week or so. Remember, in Q1, sales declined 10% due to changes in dealer inventories, as well as fluctuations in currency valuations. The firm had, like its peers, been grappling with the uncertainties related to President Trump's tariff policies. Back in April, it predicted that it had taken a hit of somewhere between $250 and $350 million in the second quarter. And our last earnings update takes us to the world of hotels and Marriott International. Let's kick off with the numbers. Now, the expectations for adjusted earnings was $2.61, actually came in at $2.65, so a beat there. Revenue came in at $6.74 billion against an expected $6.68 billion, so another beat there. And as you can see, look, the shares are flying in pre-market over 6%. Recently, its peers in the travel and vacation industries, the likes of Carnival and Data, have reported fairly steady results too. But over the last month or so, Marriott share price has fallen over 7% year to date, in fact. Okay, well, coming up, your guide to initial public offerings and ahead of the fresh listings this week. That's next on Morning Brief, Market Sunrise. Okay, welcome back. Now, Firefly X Aerospace is expected to go public on the Nasdaq this week as the IPO market heats up. This comes as Figma pulls back after soaring in its debut last week. Shares falling 27% in Monday's trading. Now, Yahoo Finance's Jared Blickry has your guide to initial public offerings in today's Stocks in Translation. Take a watch.
After the 2022 bear market, stocks were hitting record highs by early 2024. But the frozen IPO market has taken a little bit longer to warm back to life. And on today's Stocks in Translation, we are providing a refresher into IPO basics. Now let's start with the definition. An initial public offering is the first time a private company sells stock to everyday investors and gets its ticker listed on an exchange. It gives the company fresh cash. It also gives a chance to earlier investors to cash out, and it gives everyone a real-time price tag on the shares. Now let's check out a chart of IPO activities going back to 2020, the start of the pandemic. All the stimulus from the Fed and also from Congress, they quickly found a home in speculative corners of the market. Just as GameStop was peaking in early 2021, so did IPOs. There was $131 billion in IPOs offered in the US in the first quarter of 2021 alone. But the 2022 bear, it wiped out risk appetite around the world, and only recently has IPO issuance started to perk up again. There are a few steps along the way for a new IPO, and this begins with a bunch of preparation with the help of bankers, auditors, and lots of lawyers. The company's financials must be audited, and the lawyers draft what's called a registration statement that has all the docs that investors need to read. Now, this whole stage takes easily a few months to a year. Then in step 2, a company will file the package confidentially with the SEC, which is a stocks watchdog in the US. Government lawyers, they will then comb through the documents, and then there's a bunch of back and forth as SEC comments are addressed. This can easily take 6 months and often longer for smaller companies. And when it looks like the SEC is nearly satisfied, the bankers or underwriters, they put on a road show for investors to gauge demand for the shares. They will build what's called a book of orders to arrive at a price tag for the stock shares. This period is measured in days to a couple of weeks. Now, moving on, when the bankers decide on a selling price, that's called the IPO price, it's determined the night before the stock starts trading on an exchange. Most investors will not be able to get in at this price, and it's considered a privilege to get in at that IPO price. On what's called listing day, a market maker will try to align demand for the IPO shares with the supply of shares that the company is offering. And ideally, the stock will trade higher than the IPO price, which produces a gain for new investors. But guess what? It doesn't always work out that way. Finally, a lot of times shares issued at the attractive IPO price, they are locked up for a period of 6 months to avoid investors dumping the stock on the market to collect easy profits. Now this year, money is finally starting to pour back into new ventures, and we've seen some giant IPOs take place. As part of the AI trade, CoreWeave, they raised $1.5 billion. But on the very first day of trading, the stock closed exactly at its IPO price. So no first day gain for investors there. Figma and Circle, on the other hand, they delivered some nice pops for investors, 250% and nearly 170% respectively, with Chime just a little bit lower on the list. And there's still a number of unicorns or private companies of $1 billion or more in value that are waiting to IPO, from Klarna and Stripe in the fintech space to Cerebra Systems in AI to the Winklevoss brothers, Gemini crypto exchange. All in all, IPOs can present opportunities for investors, but before jumping in with your eyes closed, remember this. Over 90% of IPO stocks, they trade lower than they did on their first day of trading. And more than half the time, that happens within 3 weeks. So you can usually wait for this stock to come back a bit before dipping in. And thinking about the long term, only 1 in 5 new IPOs doubles in price their first year. A word of caution for those who like to swing for the fences. So always remember, you should treat these as riskier than average investments. And tune into Stocks in Translation, the podcast, for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website, or wherever you find your podcasts.
Okay, coming up, we'll take a look at some of today's trending tickers and give you the news behind the moves. That's next on Morning Brief, Market Sunrise. Welcome back. Now it's time for some of today's trending tickers. Okay, today we're watching TSMC, Saudi Aramco and Diageo. First up, Taiwan Semiconductor is reporting a possible leak of trade secrets related to its advanced chip-making techniques. The company said it conducted an internal investigation and identified the issue early, taking action against the staff responsible. According to the Nikkei, TSMC fired several employees suspected of attempting to obtain critical proprietary information on 2-nanometer chip development, which is expected to enter mass production later this year. TSMC is the world's largest chip maker and supplies both Nvidia and Apple. Next up, it's Saudi Aramco. It's reporting a profit decline for the 10th straight quarter as lower oil prices outweigh higher production. Oil prices declined over the quarter following a shift in OPEC Plus policy, uncertainty over tariffs, and escalating tensions in the Middle East. Free cash flow for the world's largest oil company fell 20% in the second quarter. Still, the company's CEO is confident oil consumption will grow, saying, quote, "We anticipate oil demand in the second half of 2025 to be more than 2 million barrels per day higher than the first half." And finally, Diageo. It's rising after the drinks maker announced more cost cuts. It's now expecting to save about $625 million, up from $500 million previously expected. It's part of the Guinness Makers Accelerate program that includes lower advertising and promotional spending and supply chain efficiencies. Still, the company forecast flat sales for fiscal 2026 as it feels the impact of tariffs. It's now expecting a $200 million hit to its operating profit. The company is also searching for a new leader after its CEO stepped down last month. That does it for Trending Tickers. You can track the best and worst performing stocks with Yahoo Finance's Trending Tickers page. Okay, now Disney's expected to report its third quarter earnings ahead of the opening bell on Wednesday. Investors are looking for insights into the company's experiences and streaming business. Yahoo Finance's Julie Hyman spoke to one analyst about what he's expecting. Take a listen to this.
I think the question 3 months ago would have been, how the park's doing, particularly with Comcast Epic Park opening. There was some concerns with that cut into Disney's attendance. I think Epic has done well, but it hasn't done so wildly well that you would be really concerned that Disney was seeing, a major impact. Not that there won't be an impact, but I think everybody assumed there'd be some impact. And I also, 3 months ago, people were more concerned about macro, and that seems to have receded at least a bit. I think that the more pertinent question is, they had a summer with 4 big movies. One of them, Lilo and Stitch, the remake, did very well. They had an animated movie, Elio, which did incredibly poorly and will almost certainly be a meaningful write-down. It's another original IP film that they have made that hasn't done well on the animated side. And it's not just them, it's the entire industry. Original IP animated films are struggling. They also had, I think maybe most concerningly, 2 well-reviewed Marvel films. One, Fantastic Four, which had a good opening weekend, but really had a major fall off in the second weekend. And I think in general, there's got to be some concern about the trajectory of the overall Marvel franchise and whether it's lost a lot of the interest that it used to have and was a key driver for them.
Yeah, I think we were a big Marvel household, and now we've got a little Marvel fatigue, I have to admit. And when you look at that parks question, how do you think they will be doing, given, to your point, the competition from the newly opened park in Florida?
Yeah, look, the parks business has been functioning very well. They had a little bit of a soft patch last summer, but it seems to have recovered. Again, I think Orlando will probably be a touch slower this quarter because of the Epic opening, but not so much that it's going to have anybody concerned. They've got multiple cruise ships are going to be coming to market over the next few years as an opportunity for them there to have additional growth. I think the parks business is good, right? It's going to continue to be good, sort of barring any major recession. I think everybody knows that, right? It's sort of, I don't know as an investor if you get paid for the parks business being good just because that's kind of baked into the stock.
And speaking about being baked into the stock, you've got a hold rating on it, $123 price target. What has to change for you to get more bullish on Disney?
Well, I think one thing is we kind of need to know who's going to replace Bob Iger.
Yeah, small thing, right, Doug?
Yeah, that remains a very open question. Will it be somebody internally? Will it be somebody from outside the company? We don't know. And he's supposed to be handing over the reins next year. He has been supposed to hand over the reins many times in the past, and he's still CEO after some time off. So we'll see. I think that's a really big important thing, and sort of whoever does replace him, what's their vision for Disney over the next 10 years? It won't necessarily be the same as Bob Iger's. And then I think, it's the media business, right? It's how much can they grow Disney Plus profitability? I think that they can get it higher, but can they get it higher fast enough to offset the diminishing profits of linear? I think that's also another very open question that they have not been able to answer in any concrete way.
Okay, for our call of the day, we're going to focus on gold. Why? Well, analysts at Citi have raised their gold price forecast over the next 3 months to $3,500 per ounce from $3,300. They now believe that the near-term US growth and inflation outlook has deteriorated and that the US dollar is likely to remain weak. Last week, the market was rattled by US President Trump's decision to impose sharp tariffs on exports from key trading partners, including Canada, Brazil, India, and Taiwan. US Trade Representative Jamieson Greer also indicated at the weekend those tariffs are likely to stay in place rather than be cut as part of continuing negotiations. Now, last week, the dollar weakened after non-farm payrolls increasing by 73,000 jobs last month after rising by a downwardly revised 14,000 in June. That's revived hopes of a Fed rate cut in September, with markets now pricing in an 81% chance. Now, Citi also highlighted weaker US labour data in the second quarter of 2025. Institutional credibility concerns have increased regarding the Federal Reserve and US statistics, and elevated geopolitical risks related to the Russia-Ukraine conflict. Now, gold is often seen as a safe haven asset during periods of political and economic uncertainty, and tends to benefit in a low interest rate environment, which heightens its appeal to investors. The bank also noted that gross gold demand has surged by over 1/3 since the middle of 2022, contributing to the dramatic rise in prices, which are expected to nearly double by the second quarter of 2025. Now, according to Citi, the strength in gold demand was driven by strong investment demand, moderate central bank buying, and resilient jewellery demand despite higher prices. We'll be sure to keep an eye on whether Citi's forecast proves correct here on Yahoo Finance. Okay, let's get a final check on US futures before we go now. And the futures chart is looking, well, relatively green. They're eking out some gains there. The momentum seems to have sort of eased off a little bit. That rally was fueled by dip buying and bets on the Federal Reserve interest rate cuts, cutting next month as well. Now, the main focus obviously will be earnings. We obviously brought you Caterpillar, Pfizer and Marriott. There's some earnings due after the closing bell, AMD, Snap and Rivian. And unfortunately, that is all we've got time for. That was Market Sunrise for this morning. Stay tuned with Yahoo Finance for continuing live coverage.